Hello and welcome. It is the end of the month of February and the end of a very wild week in the stock market indices. My name is Derek. This is the Money Charts channel. All bets, trades are alike within each's own risk and their own reward. And I was going to do a video of gold, silver, and this together, but then as I accidentally went to pause the tape, I finished the gold one, which worked out pretty well. So I will just make a video only for that of the stock market. Multiple time frames, starting off in the yearly term time frame. Now, there's only 1 year on here that has the entire price action below the 18 average of lows. That would be this year here in 1932, the bottom. That's when I had a high of $89.90, a low of $40 or 40.6. It's up a little bit since then. So currently price action has stayed above and within the 18 average. The only time it's been in it, we can see that it broke below the support in, so I can read these years. 1970. It had a little bit of a break in it, 1974-75, and then it got above it here in 1983. So from 83, the 87 crash. Why do they call it the 87 crash? The 87 correction. It was just a short-term crash. Nothing big. Nothing big. Okay, so recently here in 2000 it goes to the 18 highs and then a little bit of the piercing below in the lows here in the 07-08 fall and now with as far as the exact numbers are concerned, just for something to do, the 18 average of highs in the yearly time frame is 20,000. The lows is in at 16,100. On the month, it was most certainly a down month, down 10% for the month, and piercing barely below here. We had a spot where it went below it here in 2019, then a little bit here in 2015-16, and then of course the wild capitulation occurring in 2008. So therefore, if it's just the start of something, that would be exactly it, the start. On the weekly chart, 15 or so percent down for the week, 10% down, 12.5. Just a volatile day, volatile week. And when you look at the price movements of all of these, as I stated, how much time you spend below the 18 average. Well, let's just take a look at the previous months. I'm looking for times when the entire period is below it, meaning the high is noticeably below the 18 average. So it doesn't happen at all in here with any of these pierces, but it most certainly does down in here. So as far as how deep some of these previous corrections have been, in 2018, this move was that of one, because I can't count this one. This is where it broke down from it, but 1, 2, and 3 consecutive periods in a row below it. The move that it had was like 26.9 down to 21.7, so that was a little over 20%. So that's one. And then down in here, there's no periods in which it spends the entire thing. I mean, you can see the highest point in here was at the 18 high or lows. Big up run here, nothing. Okay, here's some time back in 2016 where it spent 1, 2, 3, 4, 5 consecutive periods, but nothing too deep below it, as well as before then, and again nothing too deep, 1, 2, 3 or so periods. But as far as the size of its move, going from 18.2 down to 15.4, so yeah, nothing more than the 15. It's like a standard correction, meaning what we are doing now is really at the top end of what a standard line regular correction would be. It's going to get a little more serious if it continues further. It probably will. We'll see though, because a lot of this is derived by fundamental news, of course, with the corona or Corolla, whatever they name it, coronavirus. We have 1, 2, 3 periods in here. This is back in 2011, 2012, and so for what it's worth, these moves here, percentage-wise, 12,008 down to 10,005. They've all been just a few periods, and every time of these corrections that they dip below the 18 average, and here we can see this time it didn't, which we'll get back to again in a bit, but gets below the 18 lows, and that's it for this move. And then every other time it's the same. You get below it, it establishes a support, that's it. Gets below it barely, gets below it barely, does a lot of the barely getting below it here and here. And that's just what the story of the market has been. There was a more serious one on this one, but it was getting below it, but only the one leg lower. And then it retested that in the 2015 year, but every single time during this bull market that it has managed to get below it, it has managed, of course, to save itself. Now, this one here did make one lower low, but because there was this one that didn't really do anything below it, this one in here, and there you can see this little failed breakdown in here, because it did make it below in here, and it did have another leg, but it did quickly recover it with this V-shaped formation, and then another bit below in here, another bit below in here, and now this is just a granddaddy of one individual move, of course, that being for the weekly term time frame. On the daily chart for the Dow Jones, every single day, and this is just a volatile intraday session, so I might as well bring in some of these short-term analysis. But Monday session down 3.5%, Tuesday down 3.1, Wednesday down 0.4 with volatility, 0.4% down on Thursday and Friday. How is it up 1.39% when it closed at 25? The day before that, it closed at, well, when it closed like 300 points. So really, these percentages are not from the close. It's just whatever. But you can see every single day, pretty much, that have been going down. And typically speaking, markets and the stocks will go down a lot faster than they go up. And it doesn't take a rocket scientist to say that this is, again, at no exception. On the single hour term time frame, there you can see it's just a gap. It's just been a continuous straight down action. How the price is maintained on a free fall type of major movement, has not stopped all week long, and it's just how it's been. It's just how it is. We have managed for the second time to come up to the third time to come up to the 18 average of lows. We have here, and now in here. But this intraday session is most certainly that of a volatile one, because if we look at it even further, 15-minute time frame, just continuously big volatility, 25.3 down to here, but over and over and over again. You could almost call this like a dysfunctional double, triple, quadruple bottom. All of these little moves that take place, when I say little for the stock market, they're pretty big. 24.75 up to 24.5, and 1 minute time frame. Let's just even go to that. How it just ends the day. It was at 15:45, 15 minutes before the close, 24.767, and that means it goes up 240 plus another 4, so 630 basis points and 15%, or that of over 2%. But in doing so, we can see just in the intraday session that, let me just scale it so it's easier to see. Yeah, this is pretty much how the intraday movement. So very choppy for the day. So if this is one of the ones where I talk about my buy low, sell high strategy, information, the more information box on how it works on the crypto markets. But if you just kept on putting orders to buy and sell this back and forth, especially with any type of leveraged or those ETF types of funds types of deal, man, you can get a lot of buys and sells back and forth all day long as you would pick away at these highs and lows. That's really just what the market did all day long. So now we had capitulation day after day and a little bit of up and down choppy action. When I say a little bit again, it was a lot. So that's a bit of indecision as we move into the week. But regardless of what it is, where we are, where do we stand moving forward? And when I look at this, to me, this has been a big capitulation move. And until we get any type of rallies, if this selling doesn't stop, each leg is going to get more increasement of volatility and intensity of such that the moves become 5%, 8%, 10% kind of moves, and they just get sicker and sicker. It also means that it's going to be hard to trust some of these rallies that come in, and they're going to probably be sharp as well. Fibonacci is going to be high divided by low to the exponent of those key numbers. Very easy to calculate. 29,568. I look at it as a high in here on February the 12th. 29,569 rounded. Let me do some fib math. I'm going to bring up my calculator. Okay. And the low. Well, right now, we've bounced a little bit from it. What do we got for the low? We got a low in at that of 24,681. Yep, 24,681. So high divided by low. And the linear exponential numbers will be relatively close because the differential of this number is a small one. To the root of the exponent of these numbers, and then the up target is 1.618. The down target number is negative 0.618. So 1.618 for the up. But I don't care about those numbers for this one. I care about these four. So the first one comes in at the 23.6. 25,756. That is the first number. So if we are going to continue to go to any short-term legs higher, that's where the next intended target should be. After that is the 38.2% number coming in at 26,445. I'm not going to put the 76.41 in yet, but I will put the 61.8. It comes in that of 27,597. And we'll just see how they work. Sometimes when I put these numbers in, they actually work pretty good. Sometimes. So as far as, again, let's take a look at this on the hourly time frame. We'll just see how things can develop. But this is just a huge capitulation style event. Now as far as really anything else to go over, I really don't think that there is, because technically speaking, there shouldn't be much for panicking based on price action, I believe. In the sense of, number one, if you're panicking based on the fundamental news, well, it's been weeks and weeks since this information, at least for me, because, I mean, maybe it's because I don't follow mainstream news, and the information Mike Maloney put out seemed like what we're seeing. They pretty much called it. And also the fact that you just know that there's going to be news of some level that's going to happen at some point, especially when we're dealing with fiat currencies and the banking systems as we are, and a lot of the quantitative easing that has brought it way up. And that's the key thing, way up. Way higher. And in such, and this market going way up, buy low, sell high. Market's still high at this number. And last major place we came from is between 10,000 and 14,000. Thank you for tuning in. Have yourself a great day. Bye-bye.